Yo, Mandem podcast, episode 191.
191, yes.
191, yes.
Approaching that 200.
We're back.
Getting there, little by little. We're back for another episode.
Yes. Big shout out to everyone that listened to the last episode.
Yeah,
or
man.
the last two, actually.
Good response, man.
Yeah, the
Very good
response
response.
has been really good. So yeah, really appreciate it. But yeah, keep subscribing, sharing, liking, disliking, of course. Hit us up when you think we're chatting and let us know when you agree. But yeah, keep supporting the poddy. Yeah, we keep going because you guys rate the stuff. So respect.
Yeah, man.
Come on. We have a guest on the show again.
Is he? Yeah,
Yes,
he's a guest.
It's a familiar face.
I was like,
Familiar face, but always a guest.
He used to renew his membership still.
Trust.
yeah.
It's been
a while.
It's been a while.
I haven't been on since maybe 2019.
Nah.
No. You've been on.
You've been on.
You've been on since lockdown. Because I remember you coming on when we've been doing it on Zoom. Yeah.
You have. Yeah.
I don't.
But
yeah,
today,
I don't know.
you're wearing a different face.
Different hat,
different
bro.
hats, different hats,
No,
man.
what different hat? Sorry, I fucked the phrase up. So what are we referring to you as today? Then?
Just call man Jay, innit? Like, whatever. Jamie the broker. Actually, call man Jamie the broker, innit?
Jamie the broker. Yeah.
Jamie the broker.
I gotta say, I'm a little bit vexed that you're not like in a suit or something, like no shirt.
Bro,
Hey,
hey,
trust. What's
I
going
just-
on?
yeah.
You're not selling it well.
It's the waistcoat, fam.
Listen. It's 2021, yeah? Ain't no brokers wearing suits, B.
I hear you.
Changing the rules.
Everyone's at home wearing tracksuits. And this is actually dressed up, I'm telling you.
Sorry.
You saying dressing gown work?
Yeah, dressing gown, man. This is the new normal, man. Like suits, man. Thing of the past. That's gone.
And as long as you get the job done, I guess.
Yeah, don't matter what I'm wearing.
Yeah.
Like,
It's true.
It's true.
Yeah, man.
It's true. But yeah, we got you here as Jamie the broker today.
Yeah.
And yeah, that's what the episode's pretty much gonna be about.
Yeah, you're gonna be telling us everything about what, Jay? Properties, mortgages,
Yeah.
credit.
So yeah, obviously I'm a broker, but my bread and butter is mortgages. But I'll go on to dropping some gems on credit, insurances, must do's, must don'ts, and yeah, just helping anyone that's trying to get on the ladder, just really educating them and hopefully putting them on the right path to getting a mortgage basically. That's what I'm gonna try and do, innit? That's what I'm gonna try and do.
No promises.
Yeah, no promises.
But before we get into that, I guess Jamie, how have you been since the last time we've recorded?
Yeah, man. Like I said, I thought it was like 2019, but Mike said it's probably early lockdown. When I think then, just a little bit. So then I was actually working for a company called Countrywide. So if you ain't heard of them, they're like the UK's largest like property group. So I was working for them back then. In the middle of the pandemic and everything, I was working from home, but it come to like July, and I kind of been thinking about it for a while, and I just sat down and I said, you know what? I want to go this alone. I want to do this alone. I want flexibility. I don't want no one telling me what I can and I can't do. Like, for example, if I was still employed, I might not even be able to do this today. Do you know what I mean? So like I just wanted the shackles off. Obviously I wanted to make more money as well. So yeah, July, mid-pandemic, I just handed my notice in and just went self-employed, man. And yeah, man, ain't looked back really.
How did you find that transition?
Bro,
Because that's a bit of a roll of the dice during the pandemic.
Yeah, man.
yeah, do you know what I did? I thought about it for a while, but I think anyone that does, especially in the mortgage game, just make sure you've got, funds that, worst case 6 months. Obviously I knew I wasn't going to make no money, but I needed to make sure I had a stack there that worst case scenario, if I didn't make no money for 6 months, I could pay my mortgage, I could pay my bills, and I'll still be okay. So as soon as I had that, I knew it's just going to be down to me then. Do you know what I mean?
Before you do anything, before you do anything, make sure you got that emergency fund.
The emergency fund.
100%.
Yeah, emergency fund. And it was a risk, but honestly, like, bro, like hands down, best decision I made in my life, like ever. Yeah.
Cold.
How long was it? How long was the planning before you took that step? So I guess you didn't wake up one morning and said, "I do this. I want to do it on my own, so I'm quitting." I'm pretty sure there was steps to it.
Yeah, there were steps to it. So I've been in financial. So I'll give you a little back. So I've been in financial services for like 7 years now. So I started out in a bank, in building society nationwide. That's where I started. And I was just a personal banker, innit? So I just went into it like, I just see how this can go. Do you know what I mean? There was just an opportunity. I remember I had an interview for the bank and an interview for a surveying company. And the surveying company was like 15K more, yeah? I got offered both the jobs. But I don't know why. I think I even sat with Dan's dad, my uncle. Yeah, and he was in that market and he was telling me, yeah, it's good, it's good, it's good. And I don't know why Sutton told me, I think it was because the bank was just closer to my house at the time. Yeah. I just went to the bank and I'm glad I did. Don't get me wrong. I probably could have excelled in surveying as well. But I went into the bank, not really, like I was just doing personal banking. So like opening bank accounts, credit cards, savings. And then I just started taking a liking to mortgages, innit? And I was good at it. So all the mortgage advisors were like, yeah, Jamie, man, he always does good referrals. So I was moving branches, bigger branches. And I was like, you know what, man, I might just try this mortgage thing. And then, you know, like when you're in that kind of corporate world, they're just promises. Yeah, like your chance will come. Do this, read this, do that qualification. Bro, they were taking long. I said, you know what? I'm done. I'm going to go get... So you need something called a CMAP, yeah? CMAP 1, 2, and 3. It's called Certificate of Mortgages and Practices to be a mortgage advisor. So most people, you need all 3. But there was this Countrywide said, okay, we're willing to take you on with just CMAP 1. So while I was working, went out and got that. I said, you know what, Nationwide, thanks. Gone. Went to Countrywide. Yeah, worked there for 3 years. Wait, Les, what was the start of the question? Sorry, I'm getting to it.
You're going
to the question was what steps did you take to make the decision this is what I want to do?
Yeah. So then when I was there, obviously first year you learn your trade. Anyone I'd give advice to, mortgages, be there for at least 2 years. Like you need at least 2 years. So I learned my trade. Second year, obviously I was getting better and better. And I just thought, you know what, I'm actually good at this job. I'm making them X amount of money. And then I started talking to a few people, like as you do when you're in the game, you meet people and a few self-employed people, and they were saying, you know what, if you're self-employed, if you've done that mortgage, you can make that much. And I was like, wow, like these are actually paying me peanuts. Like, let's just say, for example, I make them 5 bags, they're paying me like 6 bills or something, for example. And then I had an opportunity. So basically, a woman that I worked with at Nationwide, she became my business development manager when I moved to Countrywide. And then she said, listen, Jamie, there's this guy, he's looking for a self-employed guy. Like, I would say, go and talk to him. So I went and talked to him, and like, literally, you know what, when they say, as soon as you meet someone, but literally clicked within like 30 seconds. I said, this is the guy for me. Like, he's like Mandem, he's like from our culture, Asian brother in Harrow. And we just clicked, man. The way he's breaking stuff down to me was just what I'm going to do for the listeners today. It's just simple. He just simplified it, like how we would understand it.
Yeah.
He goes, I tell you what, yeah, give it a year, yeah. What I'm gonna do is you hand me over any lead you get, yeah, I'm gonna start paying you on them so you can see how much you can make. So I thought, all right, let's see if he's gonna pay me. I'm not even doing anything. I'm just sending him an email and a number. Well, the guy started paying me. So then cut long story short, I was like, listen, I'm gonna give this place a year. Gave it a year. It was like March. Wanted to make sure I saved a bit more, and I just said, you know what? When COVID was happening, mortgages were slowing down. I said, bro, I'm going self-employed. Just took the risk in. Yeah, now I'm here.
It's paid off.
Yeah, it's paid off massively. Massively.
That's good. That's a story to tell. You literally just mentioned it now, and I guess we'll get into the crux of it. How has, since, I guess, lockdown, COVID, restrictions, everything, how has work been for you and how's the market been in general, I guess?
Les, like, honestly, busier than ever.
Yeah.
Like, ridiculous.
It makes no sense
because
to
it's nuts.
Because I think
it makes no sense.
I think the misconception is, and I've spoken to a few people who are trying to buy properties, that they're being told, I guess, the opposite. That not that it's not busy, but I guess now's probably not the right time to want to buy a property. I guess you'll get into it, but it's interesting for you to say that it's busier than it's ever been.
So yeah, with the market, man, it's a weird one. So you've got obviously the investment market where you got obviously all the buy-to-let portfolio landlords who are dying for deals, and then obviously you still got the residential market. So the people who are upsizing or people, you know, who just want to live in a family home. So the reason I think it's so, I went self-employed July, and I think the new stamp duty changes came in September. But even before then, it was booming. But since September, it's literally been crazy. Like, obviously, the amount of money people are saving on stamp duty now, it's kind of like, if you're in that position in the next 6 months, you might as well make the move and save 6, 7, 8 grand. Do you know what I mean? Do you see what I'm saying? So, yeah, man, it's just, it's the market's booming. In terms of, you know, they say, is it a good time to buy, bad time to sell? To be fair, like, it's small margins, man. That's what I think. Like, it's a game of small margins. You might find a lucky deal, you might not. You might get bumped. You know what I mean? It's not like
blanket rule.
No, like there's no one size fits all. There's no like people often feel, oh, is it a good time to buy? I'm not sure. Listen, if you see a deal, go for it.
Case by case.
A lot of people have been saving money as well, just because they haven't been able to go anywhere for the past 10 months. Exactly. So they've got a bit more money to spend now as well. Correct.
You got a bit more money to spend, because your outgoings are less now, innit? You ain't going to work, driving. So man. In answer to that, for me, from my perspective, Les, the market is booming because I've been busier than ever, so I can only base it off that.
Cold. I guess, Jay, you have on your Instagram recently, if you're not following, it is Jamie the Broker. Recently, you, I guess, released or launched your first kind of how-to video or a jargon buster. Yes, like moving into that, like what are some of the biggest misconceptions or myths or kind of issues that people come to you with? Because, I guess speaking for myself, growing up, you hear certain things and you don't know it. Deposits and this and that, and then how much can I take out and things like equity. Like, what are some of the common questions you get?
So the biggest common one I say is, I can't get a mortgage. I got bad credit, man. I got bad credit. That's the biggest one, and it irks me because if you just sat down in front of me, I might actually be able to help you. So the big preconceptions are, you know what, I've got bad credit. I don't have any credit. They're not going to lend me anything. Well, actually, that's wrong, because all I'll do is sit down for you. I'll say, listen, get me your credit file. We'll go over it. If you don't have any, obviously it's not one size fits all in it, circumstances. If you haven't got any defaults, if you don't have any CCJs, if you haven't had any missed payments, then what are you talking about? You're going to get a mortgage. And even people with these things, people have told me, listen, Jay, man, I got this CCJ. All right, when did you get the CCJ? 4 years ago. All right, how much was it for? £100. Cool, I got someone for you. Do you know what I mean? Because I work in a market where we have vanilla lenders, right? So your vanilla lenders are who you man bank with. Like, so who do you not bank with? Main bank.
Retail banks.
Retail banks.
Deutsche Bank.
You all right.
You wouldn't know the name. The tax code is different.
So they're like your vanilla lenders. So a lot of them would say no, but I work with subprime lenders. So subprime lenders are literally lenders who will offer you a higher interest rate if you're not squeaky clean, basically. And all you do is you put it to them. They've got a criteria. Obviously, I've got the client's credit report. If the criteria matches, there's people that I've got mortgages for with defaults, with CCJs, with IVAs, and these are all typically I've got bad credit things. But guess what? I've got you the mortgage, and all that happens is in the next 2 years, I would only put you on a 2-year deal because you're probably paying like 3%. We remortgage, your credit's better, and then you just take a hit for 2 years, and then you go back onto a vanilla lender. So it's not, that's my biggest irk, like bad credit. Some people do have bad credit, don't get me wrong. But if you do have bad credit, let me tell you how I can get your mortgage in 3 years or 2 years. And that's one of that irks me the most, because don't just assume, come down and sit in front of a professional and let me help you. Another one is, can I get a buy to let? I can't get a buy to let. Like, I'm a first time buyer. Well, yes, you can, because like I said, I work with everyone, so you can. So I'll just drop a few gems. So if you are listening, come to me. Don't. I'm going to drop you these gems, but don't snake me. So for example, NatWest, Barclays, they will let you have a mortgage as a first. They'll let you get a buy to let mortgage.
As a first time buyer.
Yeah, and just for the listeners, a buy to let mortgage is just a mortgage for investment purposes, basically. So As long as you got minimum income of 25,000, they will let you do that. And then like I said, I've got my subprime lenders. Even if you don't have a income of 25,000, I can still get your mortgage. So they're probably two of the biggest misconceptions. And another one is I'm single, either a single parent or father or mum. House prices are this much. I can't get it. Well, okay, fair enough. Yeah, might not, but I'll tell you because there's schemes that can help you that might be able to get you on a ladder. So yeah, they're probably three of the biggest misconceptions about mortgages.
Yeah. Jay, just
what
to
else? You mentioned. Oh,
go on. No, I was just going to jump back to where you talked about credit, and I think now you're starting to see a lot more people talk about credit, but it's still credit. Everyone knows what credit is, I assume, but I guess the world of like credit scores, credit ratings, is foreign to quite a few people. Where can, and I know you've mentioned a particular one, but I'll let you say, where can people like check their credit scores, their credit history, if you've got CCJ, because you might even try to go for a phone or a car.
Yeah, you might not even know. Half of people don't know.
Exactly.
Yeah.
You might fail those things, but then you don't understand why. Because I remember years ago, I've never been failed credit, but then when I started looking into my credit score, I could see something on there like a default payment. I didn't know what it was. Had no idea. Brought my credit score down. But then after, I think it's after 6 years or whatever, it comes off. Yeah, but having done research after, then I kind of realized, that's what that was, and it kind of made sense. So what would you say to people trying to understand their credit score, where to go, where to find information for that?
Yeah, I mean, like I said, Jamie the broker, if you got any questions on credit, literally just DM me that I'll get back to you. You know what I mean? But Check My File is a great one that I use. It's pretty much like the majority. So you've probably heard of Experian, Equifax, and Translution. So they're the three biggest ones. But what Check My File does is all of those credit reports in one. So to kind of give an example why that would benefit someone is because let's just say, for example, Dan, you said you bank with Santander, yeah? So let's just say, for example, Santander use Experian, right? And you've got your Experian credit report. I'm like, yeah, man, this is all good, yeah? But not every credit reference agency has all the information on you because your credit could be terrible with Equifax or Translution. But I'll never know until I see you Check My File. Do you see what I'm saying? So that way, I know that if you got something bad on Equifax, then I'm not going to put you with a lender that deals with Equifax.
Right.
But Check My File is great because, like I said, the three biggest, Equifax, Translution, and Experian. It's one of those ones, I think you get like a 30-day free trial. I would always encourage people, don't cancel it, just keep it. It's like I think it's $14.99. Just keep it because it updates you, yeah? But you can cancel it if you want. And yeah, it tells you any defaults, any CCJs, it tells you when they happen, and it tells you how long they're still on your credit file for. But important thing is defaults, proper detail. Electoral roll is a massive thing as well. So I would advise anyone that is looking for a mortgage, make sure you get on the electoral roll. One, it boosts your credit, and the lenders need to see that anyway.
Jay, that's checkmyfile.com, right? That's a website.
Yeah, www.checkmyfile.com. Yeah.
Cool.
Yeah.
What was your question you was going to ask, Rich? Because I got one.
Oh no. Well, perhaps if don't go into it now if you don't want to yet, Jay. But it was about, you mentioned schemes at the end of like when you were talking before.
That's exactly what I was going to ask.
Yeah, I was going to say because I've heard of several schemes. There's Help to Buy. There's others. Can you tell us a bit about that?
Yeah, so there's a few schemes. There's the common ones I'll go over with you. But just before I do, with these schemes, they're not suitable for everyone. Yeah. So when I'm listening, I'm not saying this is what you should do, but they may help you. So first one is the Help to Buy equity loan. It's probably the most popular one. So basically, it's new builds only. Okay. I'm going to explain how it works. So the Help to Buy equity loan, it's a loan first and foremost, yeah? So you have to pay it back. Like, some people think, like, it's some free grant.
The government are giving away houses.
The government are giving you a loan, yeah? So it's interest-free for the first 5 years. So obviously that's to buy it, buy it, no interest for the first 5 years. So how it works is...
There is also a cap on
there's a cap on the property price. Yeah, so in London it's 600k, and I believe out of London it's 450k. So they're different as well. So in London, they'll give you up to 40% equity loan of the property price. Yeah. And out of London, it's 20% of the property price they'll give you up to. So you don't actually have to take 40% if you don't want it. You can take 30, but they'll give you, up until
That's
that
the,
amount.
the top end.
And then you need to put in a deposit of 5%.
You need to put in a minimum deposit of 5%. So let's just say 400k property, they'll give you 160k of that property as an equity loan, and then you have to put down 5%. What's that? 20,000. Yeah. So effectively, So effectively, you then only have a mortgage of I'm gonna say 140. I think. Yeah. 140. Yeah. You only have a mortgage of 140. So the benefit of Help to Buy is it's brand new properties only. So you're gonna get a nice property. 9 times out of 10, you're gonna have low mortgage payments, and the reason you're gonna have low mortgage payments is because you've just got 40% off the government as a deposit, right? And you still put your 5%. So if you're on a low salary, getting 40% of the government is obviously going to mean that you can perhaps get that better property because they're giving you such a big deposit now. So it is good if it applies to you. If you're someone who isn't on a great salary, don't have a great deposit, then Help to Buy might be for you. But the key thing to realize is you have to pay that loan off within 25 years, and they start charging interest after 5 years.
Yeah, they catch us somewhat.
Yeah. I mean, the majority of people pay off the loan. What they do is after 5 years, they'll just sell, right? But the key thing is as well, you got to remember, their 40% goal. So if your property you bought at 400 is now worth 600, you owe them 40% of 600 now. Do you see what I mean?
Yeah, that's the thing, isn't it? Yeah.
Yeah, it grows with the asset. So it's not for everyone. It's not for everyone.
Yeah.
Like it's not for everyone.
But it's an option.
Option. It's an option.
To get you on the ladder.
Yeah, and people don't get that mistaken with the Help to Buy ISA because that's two different things. A lot of people get it mistaken. They're like, oh, I got Help to Buy ISA, like two different things. Other one is shared ownership. Shared ownership is basically where you buy a percentage of the property. So I don't know, if a property is 400k, they might offer, they normally offer a minimum of a 25% share, minimum. So you basically just get a mortgage based on your share. So you still have to put down 5% of your share.
So on that would be what? Of 100 grand?
So 25% of the 400 is 100
grand,
100 grand,
And then you put in a 5%.
5%, correct.
5%
so
on 100 grand.
And then you have to get a mortgage for the rest.
But then when you pay that, don't you pay part rent or something like that as well?
Yeah, so that's the key. So you'll pay part rent as well. But the rent's normally a bit pricey. It's normally more than a mortgage, to be fair. But the thing is, it still gets you on the ladder, and you're in a position to do something called staircasing. And that basically means you can buy a bigger percentage. So after a year, you can then say you want to buy another 25%. Then obviously your share's now 50%. Do you see what I'm saying?
And then your monthly will come down a bit.
Correct.
Hey man, come on, fam! You need a little assistant or something, cuz. Come on.
I think also, Jay, sorry, and I think one thing to know, I guess, about because obviously I've done my research to know, excuse me, I know about staircasing is that when you staircase, it's almost like you are buying the property again, ish.
Yeah, so there's a whole new affordability has to be done, basically. So there's a whole new. Yeah, they have to accept the terms, etc. Because things change, right? Because if you're buying your staircase and your rent's going to drop now because you're going up mortgage and going like it swings and roundabouts, if that makes sense. But yeah, man, shared ownership, like I say, not for everyone, but it does work for some. It does work for some people. And I've got a little gem. So if anyone doesn't have a deposit, I've actually done a mortgage with 100% shared ownership, no deposit.
That's crazy in these current times.
Oh, hello.
Crazy, and they completed in November, so like it was recent. Property was 250. She was actually buying it off for a month. The percentage was 35%. She didn't have a deposit. I got 100% mortgage.
Crazy. So there is hope for people. Who might see the, I guess, impending doom of trying to get this crazy number of X many thousand for your deposit. There are
there's options there.
Options and they're viable.
I just don't assume, man. I realize people just make too many assumptions in this game, and they're just wrong.
You got to do your reading and speak to experts.
Seek professional help, like Jamie and I.
Definitely, Jamie who?
Give me a mic, come on.
Mike's changing his handle to
Mike P and the Peace Property fam.
Hey, come on, code.
Yeah, man. And I'll quickly move into another. Was you going to say something, Dan?
I was going to say, are there any other like schemes, or those are like basically the main two that I know?
Yeah. So one I love, is you probably heard of it, is right to buy.
Yes.
Not many people are getting them now, but listen, right to buy. Like if you got that 10 years ago and you got a property in like Hackney, Islington, you're on a gold mine. Yeah. So basically, what right to buy is, the council. If you've got a council property, if you lived in there, I think it's 5 or 6 years, can't remember. DM me if you need to know. That you can get right to buy on it. So basically, you can get a discount on the property, right? So effectively, let's just use 400k as the barometer again. If they give you, I think they could give you up to 60% discount. Don't quote me on that one again, sorry, but they basically, you can now buy the property at 60% of what it's worth.
Mad.
40% of what it's worth. Sorry, because they're giving you 60% discount. Yeah, so
that's nuts.
So like it's like, if you can get that, I don't say why you wouldn't. So you're actually getting a 400k property for 160. For 160.
Mad.
For one. It's crazy. So my thing is, once you get a mortgage on that, and sometimes you don't even have to put down a deposit. So if your salary means that affordability-wise, you can afford that loan without a deposit, you haven't even put money down.
You just go straight to paying that.
Because your deposit,
Jay,
your deposit in your equity, innit? So that's why you ain't got to put nothing down. Yeah, go on.
Okay, but you'd be offered. So if you're, I don't know, you live in a council house and you've been paying rent, you're entitled to, possibly entitled to that scheme.
Yeah, you can buy the property at a discount. So
as
the
a
council,
tenant, basically, though.
you own it. But because you've been on the council books for so long,
you've been a tenant.
They've now offered you right to buy it. So they say, listen, you've been on this property you've been paying whatever. Listen, do you want to buy this off us? We'll give you a discount.
Oh, that's mad.
But there's not pros
There's things
and cons.
to consider. Yeah.
Yeah, you can't sell it until after 5 years.
Yeah.
Okay, yeah. 5 years after you own it outright?
After you buy
5 years
after you buy it.
And that's
okay.
But
who cares? Because you're paying your mortgage, so you'll be in a position where, well, it's like what I said to you, man. Listen, do you want 240 grand? Like, you're gonna take it. That's basically what they're doing. They're basically because if you sell that property in 5 years, you're gonna be making. Let's just say the property stays at 400k. You've made your mortgage payments. You're gonna be making. You're gonna have more than they've even given to you. So
you're killing
that's
it.
That's
if you can get it, no brainer.
Yeah, you very rarely get a 240.
Bro, no one just says, yeah, listen, take 240k. Like, it's I like doing right to buys because I just there's a sense of fulfillment when you do a right to buy, but like, it's just good. I like doing them.
And I for me as well, like with the right to buy, it is almost a win for the little man, or the balance is almost being restored. Yeah, because I know it's kind of a stigma which comes with council housing and people council housing, but it's a nice opportunity for them to kind of say, I want to join this game, this rat race, whatever. So I can understand why you like it.
And do you know what? I watched a very interesting show on Right to Buy. Yeah, there was this woman. I think she got offered it. So you're really making the money, like I said, if you was offered it 10, 15 years ago, right? Yeah, because how property prices have gone up since then. There was a woman. I think she lived in Hackney, so I think she got her right to buy. Yeah, so she might have got 60-40% off. And what she was doing is she remortgaged it, took the equity out, and just kept buying properties. Kept doing it, putting money out, buying it, and now she's got like a portfolio's worth over like £2 million or something. So you could actually, like Dan said, from like I said,
come up off that.
But like you was a council tenant and now you're a millionaire. Like, because you took advantage of one scheme.
All right, just for the people that might not know, when you say equity.
Yeah, so equity, you got 400k property. If you got a mortgage of 300k, you put 100k down. The equity is 100k. So if you sold
money in the house,
it's money
you've paid off or paid into the house.
It's basically that. Yeah, so that's what it is, man.
Equity is a word that I used to hear when I was younger and just be like, what is this? It sounds good, but how does it? It doesn't even make sense. But I guess over time, you do your research, you speak to people and whatnot.
It's basically what's left in the property after you've paid off the mortgage, basically.
Yeah.
Yeah.
You mentioned as well, just briefly, just before we started recording, and you've said here about, there's different schemes for different people. And you said you wanted to do maybe our individual cases, because all of our situations here are different.
A little different, isn't
so
it?
it's kind of, it kind of makes sense to go into that.
Yeah, so this is a good one, man. And this is why mortgages, and I'm going to tell you why coming to a broker is the best thing. Yeah, well, me anyway.
What's the alternative?
You would say that, wouldn't
you? Yeah. So the alternative is going to a bank.
Standard, normal, retail.
Standard. Yeah, going to, so, whoever you bank with, like you said, you go into your, because that's what a lot of people do. They're so programmed that they know that their bank does mortgages. Okay, I'm just going to go to my bank. Yeah. That's what people think, yeah. You've got, the other alternative is you might go online. So online there's like a compare the market, but like a mortgage one. Yeah. So there's those people as well, and I'll tell you about them as well. You've got online brokers as well. So you might have heard of people like Habito. Don't want to give them too much shine.
Yeah, that's what I'm saying.
Yeah. People like Habito, but it's good. I'm letting people know their options. So they're like your and then you got brokerages, yeah. So people like you often hear the term brokerage or brokers in the city. So they literally just broke mortgages, yeah. And then you've got estate agents. So like the place I used to work, Countrywide, they owned estate agents, and then they had their brokers in the estate agents. Yeah. And then you just got an independent, for example, like myself. So the reason I'm going to use you lot, because let's just say, for example, you lot all had 100K deposit, you all wanted a property for 400K, and your salary was all the same. Yeah. So let's just say you can all afford a mortgage of 300K, from the bank. Yeah. So firstly, and it's the benefit of coming to a broker. So Dan, what's your current work situation?
Current circumstances on furlough. So money is lower than it usually is. I don't think I'll be able to get a mortgage.
Yeah, but you're still getting the furlough 80%. Yeah. All right, Richie, tell them a bit about you.
I'm a freelancer. I technically self-employed via a limited company.
Okay, Mike.
Need more information on that?
No, that's cool, Mike.
Yeah, so I'm in full-time employment, but I work in sales. So I get commission quarterly, so my paychecks can vary from time to time.
And you live?
In full-time employment, fixed salary, so nothing changes from month to month.
Okay, wicked. So I'm just for ease, yeah. Let's just say you're all on.
Alright, does this feel like Jamie's going to do a magic trick to anyone?
Yeah.
Alright, this is.
Boom! You got a mortgage.
Boom! Alright, cool.
Yeah, no, you'll get it. Well, let's just say you're all on 30K. Yeah, Mike's salary is a lot of commission. Dan's 30K is from his furlough. Richie's in self-employed. And like I said, Les is actually my vanilla customer, yeah? Because he's just straight employed, right?
Let's not use that term, but yeah, go on.
Yeah.
No, keep it.
Let's change it. Chocolate, let's change it.
All right, cool. So let's say, for example, yeah, Dan banks with Nationwide, yeah? So Dan thinks, you know what? Yeah, me and the missus, we're going to go Nationwide, get our mortgage. Nationwide don't take applicants that are on furlough, so bye. Like Dan can't get a mortgage.
One done. Yeah.
That's one. All right, Mike goes in there. Mike, let's just say, for example, Mike's 30K, 20K of his commission, 10K of his basic. Right now, because of COVID, Nationwide aren't taking commission. But
I'm kicking up stink.
Do you see what I mean? Yeah, they're not taking overtime. They're not doing that stuff. All right, cool. Richie, contractor. So, for example, with different lenders, because Richie's a contractor, it depends how long he's been doing it. It depends what his last contract was, etc. So certain lenders will say no to Richie. So for example, people like NatWest, they'll say no to Richie because he doesn't fit their criteria. Les, for example, would probably be the only one who fits everyone's criteria because he's squeaky clean, if that makes sense. Yeah. So what the point being is, you can waste your time walking into your bank. You can have all these appointments. Whereas if you come to me, I can tell Dan, Santander takes furlough, I can get your mortgage with them.
Exploring the whole.
Yeah, Mike, Santander are also taking overtime and commission, so we're going to go with them. Richie, because you're self-employed and you're a contractor, Halifax have got great proposition for someone of Richie's, basically what he does. So if you go to an estate agent, for example, imagine going to an estate agent and you can only buy the houses through that estate agent. You limit yourself, innit?
Yeah.
But that's exactly what you're doing with a mortgage. If you go into Nationwide are going to tell you what rates Nationwide offer. They're not going to tell you what HSBC and NatWest offer.
Of course.
So I could potentially save you £200-300 a month, or get you the house you really want because you came to me. Or you could go Nationwide and get a worse house at a higher rate. Or because you didn't come to me.
It's like a one-stop shop, man, and saving a lot of time.
That's exactly what it is.
You've got the bird's eye view on the game, kind of.
Basically, It's like man ain't going Asda for that finest Tesco brand. Do you see what I'm saying? Like, man want that Tesco finest, bro. I'm not going to find that in Asda. So basically, I can find the best lender that suits your circumstances. It's a bespoke service. Like, it's for you because everyone's situation is different. That's what it is. Don't waste your time. Don't waste your time going to your bank because A, you might get a worse interest rate, and B, it could potentially stop you from getting the house of your dreams. Do you see what I mean? So
you don't want to do that.
Yeah, you don't want to do that. And you want to save money, innit? Especially first-time buyers. You want to save money. So, but the benefit as well on the other side is obviously you don't pay a bank, right? So you don't charge a fee for a bank. So banks don't charge fees, right? So I guess the benefit of them is, okay, you might save a broker. Let's say a broker charges standard normally about $699, $599, yeah? So you might save yourself that. But when you're borrowing hundreds of grand, £700.
You
sacrifice that for the house of your dreams, I guess.
Or I could save you 7 bills within your first.
You said that across the first 3 months, or
because I got you a better rate. So
the return on investment, innit?
Yeah, man. I get it though, because I worked in a bank, innit, and that's all I knew. All I knew was Nationwide. And when I jumped off that cliff, I was like, wow, there's a whole new world here. Like,
and you're so right about conditioning and whatnot. Like, these are brands which spend like millions of pounds on advertising and whatnot on our high streets. It's what our parents have always done.
Correct.
So kind of just following in those footsteps blindly. Whereas, if, as you said, if you just take a step back and kind of see it from a bird's eye view, you can actually reap the rewards.
It's crazy. And let me tell you a little bit about this COVID market as well. So anyone that's listening is thinking about, getting a property in the next 6 to 12 months. The COVID market is absolutely crazy. So like I said, pre-March, they'll take all the overtime's fine. I could get you a mortgage with overtime and commission. Now I might have 2 or 3 who let me do it. Like the market is crazy. So for example, like self-employed people now, some lenders will only lend you 60% of what you're actually earning. As the pre-COVID, you get 100% of what you're earning. Okay. So the majority of...
They don't want to take the risk, innit?
Yeah, they don't want to take the risk. And I get it. And even pre-March, when we was proper in lockdown, I feel like, was it like April, May? They were asking for 40% deposit for a first-time buyer. 40%.
Yes.
If you think about what people are earning and whatnot, it's / impossible, especially if you're looking
in London.
Myth.
Jay, just I guess it's one of the sort of, not a jargon buster, but just as a sort of group of people, first time buyers. People always hear first time buyers this, first time buyers that. What are some of the benefits that first time buyers get? And should utilize if you are looking to buy a property?
Yeah, so with the whole first-time buyers, it's a little bit of a misconception, because a lot of people think, okay, only first-time buyers pre-COVID could put down 5%. But even if you own the property already, you could still do that. So the really beneficial benefit of a first-time buyer is stamp duty. Yeah.
Mm-hmm.
So anyone that doesn't know what stamp duty is, it's the land tax basically you're charged for buying a property. So pre-COVID, if you wasn't buying a property for over 300k and you was a first-time buyer, you wouldn't have to pay stamp duty. But anything over 300k, you would have to pay stamp duty on.
Mm-hmm.
So as a first-time buyer, basically you had that benefit. But whereas if you'd owned a property before, you'd have to pay a certain percentage of stamp duty land tax. So the benefit really for first-time buyers is there's a few products that are for first-time buyers. You might get a better interest rate.
Mm-hmm.
But really, the main thing is you save a lot on that stamp duty.
Okay.
That's the main thing, really. But
well, when stamp duty returning, or has it already?
It ends 31st of March. So it's still here. Stamp duty is still here. They've just changed the parameters. So it was 200k before. Now it's 500k.
Yeah.
If you was an investor, you would have been paying 5% before. Now you're paying 3%. So there was a lot of money. There's been a lot of money lost from the government, but for us, there's been a lot of money saved, man.
Yeah. You also do like life insurance and that as well, isn't it?
Yeah. So life insurance, home insurance. Life insurance is actually something that I actually enjoy doing because I get the value of it. Yeah. And I've seen how people, when I was working in Nationwide, I've seen how people without, like, literally some guy who got a mortgage, advisor offered him life insurance, and I think it was literally 4 weeks later he got cancer, right? So the proposition was to him, okay, take out some cover, which means if you get cancer, your mortgage gets paid off. Didn't take it. Got cancer, can't work. How are you going to pay your mortgage? You know what I mean?
No.
So, what's that, repossession type situation?
Yeah, repossession type situation. Or selling, innit? Selling, and then you don't have a house.
Yeah. So life insurance it covers you for
life, like circumstances,
illnesses, and
So you don't have. A lot of people think you need to have life insurance when you have a mortgage. So there's 3 different types. So the first one is life insurance, and that's basically covers you if you die, So whether you got a mortgage or not doesn't matter, So let's just say, for example, Mike wanted life insurance. He wanted 100k. So basically, on Mike's death, whoever Mike puts in his I'm going to get a bit complicated, but listen to the jargon busters. I'll explain these. He'll put this into a trust. So let's just say Mike's got no kids, no missus. He'll put it into a trust. And basically that 100k will then go to whoever his beneficiary is, say if his mom, his dad, his brother, So they will get 100k, So majority of single people don't get life insurance because they're dead in it, so they can't benefit from it, right? But if, for example, if you've got a kid or if you've got a missus, that 100k on your death can help them with the bills. It can help. It just basically helps with the standard of living, right? But the common one is the mortgage one. So it's life insurance, but it just covers your mortgage. So if you were to pass away while you have a mortgage, your mortgage gets paid off, basically. So typical, if you got a family, let's just say, for example, the mum's the breadwinner, guys stay at home. If she dies, how's he gonna pay the bills? You see what I'm saying? So that's where life insurance helps. And basically, the aim for life insurance is you don't want to be worse, better off if there was a loss. Basically, you want that money to make sure you can still do everything you was doing pre the death, basically. And then you got one called critical illness cover. That's probably the most expensive one, and the one that I would probably advise because it's probably the most likely to happen. That's why it's expensive. And that just basically means, but it's a good one as well, because if you survive from it, you can still benefit from it. So if you have a heart attack, cancer, multiple sclerosis, there's so many different ones. If that happens to you, your mortgage gets paid off. So whether you survive, die, your mortgage is paid off. And a lot of the time when I'm talking to clients, I'm explaining the benefits, because I don't recommend it if I don't think they need it. But if I think you need it, and I can see your bank statement and you're paying £70 for your iPhone 10 or whatever, this life insurance is going to cost you £40 to protect your life, and you don't want it. I can't rationalize it. But that's me coming from a professional view,
informed perspective.
I know it. But when you see some of the things people spend their money on and they don't want to spend it on protecting their life, it's crazy.
It's value. It's about value propositions and whatnot. And how we need to maybe realign those, as opposed to.
And bro, people think. Let's be honest. People think I'm 25. I'm not gonna die. I don't need life insurance.
Yeah.
You know what I mean?
I've got an example of that. Yeah. So I think I've got all of it. Like when I took out mine. And just the way I thought of it was, some people say, oh, I'm 25. But everyone who passed away was healthy at a point. Everyone was 25 at some point, and they probably had the same views. So that's why I was like, I have to get it, because everyone who ends up, unfortunately, encountering these things, it was fine and dandy at one point. So
that's what I'm saying.
Yeah.
And Dan as well, the older you get, the more expensive it gets.
The more, and then the more likely you are to run into these.
Exactly. Yeah. So, if anyone's got any questions, man, on life insurance, just hit the DMs. It's a good thing to have, man.
Yeah.
Did you cover them all, Jamie? You said life insurance. You said the next one about critical illness. Was there any more?
Yeah, they can get confusing, but I'll just try it quickly. So you got life insurance, so you can either do that whether you got a mortgage or not, and that's literally payable if you die. Yeah. Critical illness is payable, so you can get critical illness on a mortgage. You don't have to have a mortgage. It's payable if you get a critical illness. Yeah. You set the figure that you want. Yeah. And then there's income protection as well. So that's an important one. So that literally does what it says on the tin. It protects your income. So if you can't basically work, you basically get paid a salary. So let's just say you got cancer, right? And you had income protection. You can't work in it if you've got cancer. So you will then get a monthly payment until you can go back to work, basically.
Okay.
So that's the other one. That's the other one. But like I said, it's not one size fits all. Depends on the client.
I'm surprised more people don't talk about those things, man. Like actually thinking about them, I'm like,
no one wants to talk
stupid to not.
No one wants to talk about death though. Like it's not a nice thing to talk about.
And it's something that we all encounter, but I think
it's going to happen. Like
the more we talk about it and prep ourselves for these things, and I guess make it an easier journey or obstacle, the better it is. So,
and I think life insurance is also one of those insurance policies that you can't be penalized for not having. So like car insurance, for example, the obvious example.
Yes.
You get penalized for it. But whereas life insurance is you have it and it's just running in the background. And touch wood, hopefully nothing ever happens. But in the instance that it does, you're gonna wish that you did have it.
And no matter what no one says, like money is a healer. Like if you've lost a loved one and someone says, okay, here's 200k, it's never gonna bring that person back. Don't get me wrong, but it can help with funeral costs. You know what I mean? It can help. It can help with other things. So
a raft of things. A
raft of things. But the reason why we don't talk about, no one wants to talk about death. No one wants to talk about dying.
Of course.
You know what I mean?
You're thinking, I just bought a house. Now you're talking about in case I die to not pay off the house.
It's a downer, like.
I don't enjoy the like. Imagine someone's they got their mortgage completed. Like, let's talk about if you die now.
But it's a real thing that should be spoken about. You keep mentioning if people want to hit you up, they can DM you. I saw on Instagram you put up an opportunity for followers to ask you some questions. What were some of the questions that were sent in?
1 second. So one of the questions was, how do I go about getting more than one residential mortgage? So basically, the first thing you got to ask yourself is why. Why do you need two places you're going to live in? And I'm going to say a word which is like a buzzword for me. It's plausibility. So lenders look at things of, does it make sense? So if you live in London and you work in London, why do you have two residential properties? Doesn't make sense. If you live in London and you've got a new job in Liverpool, then that makes sense if you buy a residential property in Liverpool. So yes, you can have two residential properties, but it has to be plausible. It has to make sense. You're not going to buy one residential property. You're not going to have a 4-bedroom residential property in Enfield, and then buy a 2-bed in Wood Green. It's not plausible. It doesn't make sense. Why would you downgrade?
It might be convenient for some funny,
so
some dodgy people.
A lot of the time, I get this question, can I just rent it out? Can I just do this? So that is what I get all the time, like, because I know why people ask them questions, because they want to rent out the other property. But like I said, it's all about plausibility, man. With lenders, it's all about does it make sense?
So Jay, so say I went to a lender and said, I somehow managed to get, I have one residential property and I want to get a second.
Yeah.
What sort of?
Why?
No, as in, what would be the negative in terms of the lender doing it? So what would the lender sort of penalise me for?
Why wouldn't they want to give it to you?
Why wouldn't they want to get me?
Risk the money they're putting out, maybe?
No, because you can't live in two properties at the same time.
Yeah.
So
and it's cheaper than getting a thing, right? Than getting a buy-to-let or whatever.
No, what it is that you lot are frozen.
Rich, your video.
I'm back. Oh, I can hear you, lot.
Yeah. What it is they want to make sure you're not doing. They call it a backdoor buy-to-let.
Right.
So
okay.
They want to make sure you're not renting it out, and because buy-to-lets, are investment properties, you have to pay tax on them. So if you do that, first of all, you're avoiding tax, which is against the law. Yeah. Secondly, you're not going to be putting down as big as a deposit because on a buy-to-let you got to put down 25%. If I get second residential, I'm putting down 10%. So the lender have rules and codes of conduct they have to abide by.
Yeah.
So if you literally just walked into a bank and said that, they're just going to laugh at you. Do you know what I mean? But like I said, if it makes sense, it's doable. Like I've done that for clients that it makes sense for. Another one you get is all the time. Is I've got a second job, man. I've been working there for 2 months. They'll be able to lend me more now, innit? Because you got another salary, right? But lenders are not stupid. If you work 40 hours a week and you're a nurse, how I know have you got another second job for a chef that's 50 miles away? Do you see what I'm saying? Like, it's all about making sense. And if it makes sense, lenders are normally cool. Like, they're people, innit? They're underwriters, they're people. They're like us. But if it don't make sense, like me, I'm not going to put through something that makes sense. That doesn't make sense anyway. But you get that a lot, man. Like people will literally, so a lot of lenders, they don't even take into account second jobs because they know that people will just get a second job. As soon as they get the mortgage, stop it. Do you know what I mean? Whereas, the mortgage loan has been, has basically been given to you on the premise that you've got 2 jobs.
Yeah.
You know what I mean? So,
to double back a little bit, did we touch on buy-to-let, Jay? I can't remember.
No, I think we
really
spoke. I just said, So buy-to-let is probably a term the listeners probably hear a lot, and I think in this whole new generational wealth property, the buzzword.
It's the space we're in,
it's a space we're in where
freedom, financial independence.
Correct. Yeah, everyone. Yeah, you know what, man? I'll just rent a few properties. I'll say my And in reality, becoming mogul. In reality, there are moguls and there are people like that, but it's not easy. Do you know what I mean? It's not easy. So, firstly, with a buy-to-let, you need to have at least 25% deposit. And with a buy-to-let, it's not based on your earnings. So whereas a residential mortgage, right, they normally lend you 4.5 times your salary, 4.7. That's what you can borrow normally. With a buy-to-let, the security is based on the rent that you're going to get because obviously you're telling me you're going to rent it out, right? So lenders do something called a stress test, and I'm not going to confuse the listeners. They do something called a stress test in the background. So if that rent is enough, it's normally about 145% whatever the mortgage payment is, right? So if you've got £1,000 mortgage, if your rent is at least 1,450, you can normally get the loan, right? Yeah. But it depends on the lender. Every lender is different, and then you can get the loan and you can basically rent it out, basically. But with obviously buy-to-let, there are tax implications as well. So you have to obviously pay tax on a buy-to-let because it is an income. You do get an allowance, so you will get a small allowance. I think it's about 2K, give or take, in terms of what you earn. If you buy a buy-to-let as well, and you already have a residential property, you're going to have to pay additional stamp duty on that property as well. So just be aware of that. I'll touch on something called limited companies, quickly. So a lot of people, and you've probably heard of this, everyone says, okay, just get your buy-to-let in a limited company, right? Because if you're a higher rate taxpayer paying 45%, that's what you're now going to pay on your rental income, right? But if you get it in a limited company, you only pay corporation tax, which is 19%. So that's why you got a lot of people at the moment buying properties in limited companies. But buy-to-let, don't let it scare you. It's pretty easy. As long as you have 25%, we can have a conversation in terms of the deposit. The majority of people get buy-to-lets on interest only, yeah? So that basically means you're only paying off the interest on the loan, yeah? So that means your payments are going to be much lower than if you got a repayment mortgage where you actually pay off the capital. So if you bought property for 400k and you put down 25%, which is 100k, that's right, isn't it? Yeah, 100k. So you basically mortgaged 300k, yeah? If you get a 25-year term, in 25 years, your mortgage is still going to be 300k on the interest only, yeah? Okay. And that's why your payments are so small. But if you get a capital and repayment mortgage, your payments are going to be a lot higher. So the majority of buy-to-let investors have interest only because it's all about the income. They want more income. They want more income. That's what it's all about.
And at the end of that term, you have to pay off that 300 in a lump sum.
Yes, Dan. Correct, Dan. Yeah. So you have to pay off. So you need to have a repayment vehicle. Can you not see me? Yeah. You need to have. I'm going to give you an example. So you need to have like a repayment vehicle in the background that pays off that interest only, and that's pretty easy because all you say is you're going to sell the property in it because you've already got the equity in it. So that's what you have to say. But I'll give you guys quickly an idea of the difference between payments of a repayment and interest only, and let you know what you think would be more beneficial. So just get this for you. All right. So for example, it's actually 400k property just comes up. Loan 300k. Yeah. So in this COVID market, like I said, interest rates are a lot higher. Yeah. So you would pay on a 400k property, you'd pay £507 a month. Yeah. On the interest only. Yeah. You'd probably get, for a property around here, you probably get about 1,500 rent. So you probably make about £1,000 a month gross. Yeah. So before any tax or anything's deducted, which is a good return. Yeah. That's 12k a year. Yeah. If you got that on a repayment mortgage, and we'll just say, for example, we'll just go for 25 years, for example. Yeah. Because basically the longer the term, the lower your payments on a repayment mortgage. You would be paying £1,300 a month. So you get why people get it on an interest only, because if it's an investment, you want to make more money.
Yeah, you're just going to make more money.
The minimum you can.
Exactly. But not all people do that. Some people, they want to pay that off. And obviously, when you're paying it off, I'll say the word again, equity. If you're paying it off, you're going to have more equity in the property. When it comes to, you don't have to sell the property when it comes to the end of the 25 years.
So with that repayment one, you're making, what was the number? It was one. So you'd be making 200.
So you might be making, say, £200-300 a month. Whereas with interest only, you're making £1,000. So I know what I would do personally.
Jay, just to not, I guess we don't want to shortchange the listeners. You mentioned a stress test with buy-to-lets. Just cover it quickly with, I guess, if you want to include
it's confusing, so we're really getting into the
show us your skills and break it down very quickly.
All right, so lenders will do something called actually, I'm going to use my brother, because my brother's trying to do this now, literally just helping him in the car. So my brother has a 246,000 mortgage, with a lender, So this lender uses a stress test of 145%, So what you do is you get a mortgage balance, you times this by 145%, And then there's something called a pay rate, I'm not going to we'll go on to pay rate, they do something called a pay rate at 5.5%, So then you times 5.5%. Hold on, 243. So 243,000 times 145% is 352,350. Then you times that by the pay rate of 5.5%. And that's £19,379.25. You then divide that by 12. So the figure that I got is 1,614,933. So he now needs that property to be rented out at minimum 1,614.
Got it. Yeah.
I can see why they call it a stress test.
Trust me.
Jamie was doing the maths to say, you get it? I was like, I'm not even listening anymore.
If you really want to do your research, you can do that.
Of course,
lenders have these calculators in it. So you literally just put in the rent, put in the mortgage, put in the profit price, and it tells you what rent you need.
And that kind of makes you know whether or not it's a viable.
Correct, Dan. And one of the biggest things and why mortgages don't go through is because people lie and about how much rent they're going to get. So, for example, if you need a stress test, if you do a stress test that says you need 1,600, people will say, yeah, that property is going to get 1,900, yeah. But when it comes to the valuation, a valuer is going to go round, yeah. And what he does, he uses comparables. So he'll see what properties in a quarter-mile radius, same property, same type, what rent are they getting? So what I do is I call around estate agents, I go on Rightmove, and I see because I know clients, they just want you to get them the mortgage, so they're not always going to give you the right figure. That's why in this game, transparency is important because people need to tell the truth. Because if you lie, you're just not going to get the mortgage.
Yeah, of course.
So you might as well just be honest, man. And then, as long as the lender goes round, because they do evaluation. Valuation is the most important part, I would say, of the mortgage process of why they don't go through. If the surveyor says, you get 1,700 for this, you'll get the loan. Do you know what I mean?
Yeah.
But if they say you'll get 1,300 for this, you'll get a lower loan, which means you've got to put down a bigger deposit.
Yeah.
But they're important. Valuations are massive, man.
Yeah, of course.
Yeah.
Of course.
What were some of the other questions?
Yeah.
What was the other? I wrote it down. One sec, boys.
I'm sure we probably covered some of them anyway.
Yeah, we've covered a lot.
I feel like I need a qualification or accreditation.
Yeah. A certificate at least from Jamie the broker. That's it. I got one, Jay.
Yeah.
The transition from going to self-employed, Jay, how do you manage just your day-to-day anyway? Are you still doing like 9 to 5? Or find yourself working in the evenings or weekends?
Well, I'm so productive in the evening. Like, don't get me wrong. Like, I'll log in. I know we log in about 10 o'clock, to be fair.
Yeah.
No, actually, that's a lie. It's 9 o'clock. Log in at 9 o'clock.
Someone's watching.
Probably, yeah.
That's a lie. Let me bring it forward an hour.
Yeah, 9 o'clock, man. Yeah, no, 9 there about.
What's that? After the 6 a.m. gym session.
Yeah.
Sometimes 6:30, but no. So general, I work like I'm proper productive at night, man. So sometimes I'll be working till 12, 1 o'clock.
Yeah.
So I'll just put in the work at night. But in terms of my day, it's just not as structured. I've just got a lot more flexibility. Like if I don't want to work on a Friday or a Thursday, I don't have to. You know what I mean? Because I know I'm gonna put that work in maybe on Saturday or Sunday. But it's just about the balance, man. Like I said, I got my little boy is home with me now. Obviously, my missus is a teacher. She's only doing 1 day a week. But like having him, like it's so hard. Like trying to do this job, but a lot of clients, they understand, man, because they're working from home. I hear dogs in the background, kids in the background. So they know, do you know what I mean? As long as you let them know that, listen, you might hear my boy in the background. It's cool, man. But yeah, Mike, when I first went, I was just working from my office, and obviously COVID hit, and I was just working from home. But I prefer working from my office every day of the week.
Yeah, same.
Yeah. Because you just you're more focused, man. Too much distractions at home.
Yeah. And then you're just in the same four walls, like
same
all day.
Yeah, but that's what I want to touch on. I got a question on the Instagram about can you get a mortgage if you've been self-employed for a year? The answer is yes, you can, which is good. Majority of lenders, they want 2 years self-employment, but I do have 2 or 3 who will go off one year. So yeah, man. You can get a mortgage if you're self-employed.
When Jamie says he knows or he has these people, in my head I imagine like they're in a room, and when he needs them, he opens his room and says, "All right, you come, let's go." That.
Bro, you see, getting a mortgage, yeah. Like I've really, and before I was talking to my girl, yeah, and I was like, "Bro, I don't know how I'm gonna break this down to these lot, yeah." But it's like a puzzle, yeah. It's like fitting so many different pieces to a puzzle. So I'll give an example. Yeah. So I had a client. He just started work, so he doesn't even have a pay slip. Yeah. Right. He only has a contract. So let's just say I've got 10 lenders. Yeah. I've got about 50, but let's say I've got 10. That narrows it down to about 3. Yeah. Already. Yeah. Because there's only about 3 lenders who will go off a client with a contract. Yeah.
Yeah.
And now let's say that guy's got a CCJ as well. Yeah. So now I might have what? Okay, starting it. Say I got 50 and I narrow it down to 10. Yeah, with a contract. So say he's got a CCJ. I might have 3 lenders now. Yeah? Then he tells me he's got a buy to let in the background. So now I might have 1. Do you know what I mean? So every client, like I said, Les is probably, like I said, Les, chocolate Les, yeah?
Vanilla.
Is not what you want, but it's straight. It's
easy to do. Easier to do.
So Les, I could just whack that puzzle together. But especially when you got a missus and a husband and a wife, he's self-employed. So I can only go to, he's self-employed for 1 year, like I just said. Yeah. She's on contract. He's got a CCJ. She's got credit card debt. Like, I might only be left with 1 lender now, bro. Like, you got to fill it in, and it's so hard, bro. It's so hard, man.
Is there ever
the majority of my job's research?
Yeah. Is there ever an example where you think, or you might have even experienced, where it's not possible right now?
Yeah.
Tough, man. That must be tough.
Yeah.
So what kind of unfortunate boxes would you have to tick for you to turn around and say, I guess it's down to the lenders that can offer their services, but what would you have to be, I guess, at the very bottom of the list to say, yeah, this isn't going to happen for you right now?
Yeah, so for two examples. So first one, I had a client. He was filed for bankruptcy like 3 years ago, and he was an undischarged bankrupt, so he's still bankrupt, if that makes sense.
Okay.
So I just said, listen, I can't help you. Yeah. So someone who's been discharged or bankruptcy for 6 years, just a little thing, I can help you. Yeah. But he was undischarged, so there's nothing I could do. But what I did say, listen, you've been for 3 years. Wait till 3 years. Once you're discharged, we can have a conversation again.
Yeah, that's it. You can tell them how to get to that stage.
You can tell them how to. Yeah. And in the meantime, just make sure, like what I can't stand is like someone says they want a mortgage. Yeah. You see them, and in 6 months you go and see them, and they've gone and taken out a car on finance. And what are you doing? Like, what's the priority here? The car or the house? Do you know what I mean? So, and another situation is sometimes based on your earnings, you just can't get what you want. So let's just say, for example,
affordability.
Affordability. If you've got 2 clients who are Les on that one, like, and this happens not a lot, but it does happen. Yeah. If you've got 2 clients who have got 50k deposit and they're both on 30k, they got no debts in the background, because debts can affect how much you can borrow, So when I say debts, no loans, nothing, So they could probably get about 150k based on their income. They got 50k deposit. They want a property for 200k.
Yeah.
So the client's telling me now, well, I'm staying in London. I want a property, a 2-bed flat. All right, well, that's 350, so I can't help you. Do you know what I mean? So you either rein it in a bit, or
you wait.
You rein it in. Yeah, you just need to find something. Like, I'm telling you, this is what you can borrow. That's your deposit. That's what you can get. Do you know what I mean? If you don't want to lower your expectations, then that's up to you.
That must be a tough part of your job, like having the tax, because like telling people you can't have something based on what they earn, like it's just a little bit. It must be.
It is, man. It is, and I'm very, like, you see me. I think my biggest commodity here is my convenience. I'm very, like, you can message me at 11 o'clock and I'll get back to you. That's what a lot of people like about me. I'll speak to you on the weekend. Like, you can WhatsApp me. Like, I've got clients, Mr. and Mrs. in a WhatsApp group. Do you know what I mean? Guys, valuations on this date. It's convenience, and you'll realize that having that transparency and convenience, is massive, bro. Like, but Dan, sometimes you have to just break their hearts, but you just break their hearts nicely. Like, guys, just to manage expectations, that's not achievable. You might just have to lower your expectations, and guess what? In 5 years, let's hope that in 5 years your salary doubles and you're earning more, and then maybe you can get that house.
It's not a forever thing. This is how
Jay, I've got probably.
I feel like Les is trying to buy a yard, fam. He's going ham.
Do you know what it is? It's and I've said this to Mandem before. It's definitely something I want to do. I feel like I need to do it for many different reasons. But I'm always someone that likes talking to someone that I know, someone I'm familiar with, someone that's, I guess, done it, someone that's in the field, because you can watch like YouTube videos of all the millionaires and billionaires, and they will give you certain things. But when you talk to someone who you've been with, someone you've grown up with, the way they drop it is very different. So you're saying certain things, and I'm like, okay, cool. Like I knew that, but you've just said like everything you've said has just kind of made it seem like it's almost impossible to not get a mortgage.
Yeah.
You just have to be really something would have had to have fucked up quite bad along the way.
Correct. Yeah. Like, do you know, like 9 times out of 10, there's a way in it.
Yeah.
There's always a way. But like I said, there's, you know, sometimes you can't help everyone in it, but what you can do is lead them, you know, along the right path. But
what I was going to ask, at what is a mortgage broker involved in the entire process through to buying, or is it sort of they come to you?
Yeah.
They ask questions, you ask questions, you get all the details, you find them sort of a lender, and then do they sort of move on with that lender, or where do you stop and start?
Yeah, so a good mortgage broker stays with them through the whole process. Like myself, like I'm there from the time you first sit down with me to when you get your keys. Yeah, and it's just that communication.
Yeah.
So, like I said, another negative is going to a bank here is once you got your mortgage offer, which I'll explain a little bit about if you don't want me to, how it works from start to finish. Once you got your mortgage offer, the bank kind of just, all right, buy now. Do you know what I mean? And so much can change from your mortgage offer to completion.
Yeah.
Like, do you know what I mean? So that is another negative of a bank here. So Les, how I would say, so if you just anyone listening is thinking about, you know, either buying a property to live in or wants to invest, first thing I would say is just obviously go down and speak to a broker, because what you don't want to do is start looking at houses, but you don't know if you can afford them. So that doesn't make sense. If you go to a broker, I'll tell you what you can afford, and that way you're not heartbroken. Do you know what I mean? So you come to me. I'll normally ask for last 3 months pay slips if you're self-employed, last 2 years tax stuff. I'll say, listen, guys, this is what you can borrow. This is what I advise. You need to get something called a decision in principle, which I spoke about in my Jargon Buster video.
A dip, come on.
Yeah, the dip. You need to get this because what this does is going to give you peace of mind because now you know, oh yeah, I can pretty much get a mortgage, you know, subject to, you know, them valuing the property and underwriting. So you get a decision in principle, you go, you view houses, you see something you like, you put an offer in, At that stage, when you put an offer in, once your offer gets accepted, you then need to get a solicitor involved, So the solicitor, I can't stand solicitors, by the way. I'm just going to tell you that now. They are headaches, And anyone watching this knows what I'm talking about. If you bought a property, you know that very few have a good experiences with their property solicitors. What was yours like, Dan, actually?
Smooth. It was smooth, you know. Never met. Was recommended. I didn't go to one in London. I went to one in Norwich, and we never had to see him. And the price was chef's kiss.
Yeah. You never. It's bad. You never see your solicitor. It's crazy. So you get a solicitor, right? And then the solicitor does all the legalities. So basically, the solicitor will liaise with the seller solicitor because there's things like searches, there's money laundering searches there's money laundering checks they have to do. Just all the legal stuff, that goes with buying a property because remember, it's the biggest financial commitment. So you need someone dealing with that. So you get someone to deal with that. Offer gets accepted. So then what I will do now is I'll do something called, I then have to submit the mortgage application, And that basically means is that I submit your whole case. So name, date of birth, any debts that you've got, etc., blah, blah, blah. How much you're borrowing, proof of deposit, pay slips, get it all sent to the lender. And then they will do something called underwriting, So that's basically, if I sent something over to Dan's at the other end of the computer, he's now, as an underwriter, he's looking at the case. He's making sure everything's plausible. He's making sure that this client the client can pay this mortgage, basically, making sure it's affordable, making sure that even with these debts in the background, it's still affordable. So he's doing that, Because when 9 times out of 10, when Dan's happy with that, we get the valuation booked in. But some lenders, they do the valuation before it even gets underwritten. Personally, I would prefer as a broker, underwrite it, tell me it's okay, then we get the valuation.
That's it makes us logical.
That's the logical way. But it doesn't always happen like that. So then surveyor goes out to the property, looks at the property. Not too bad. I think this is an adequate security for the loan. Because a mortgage is a secured loan. The house is the security for that loan.
If you don't pay, they come take it away.
Yeah, exactly. Basically, yeah. And that's why at the start of COVID they were saying 40% deposit, because they knew that a lot of people's jobs are risky. So if they lose their job and they can't pay the mortgage, at least I've got so much equity because the clients put down 40%. Do you know what I mean? So the risk is less. Do you see what I mean? So that happens now. Valuation's done, and then what I like to see is a mortgage offer. So that's a mortgage advisor's role. You get me the mortgage offer. So then once we've got the mortgage offer I'll then send to the client, go through it with them, make sure they're happy, and that gets sent to the solicitor. Yeah. So the mortgage offer is a huge hurdle because your mortgage is secured. Your mortgage is normally secure for 6 months. So as long as you complete in 6 months, you don't need to really readjust the mortgage, right? But remember when I said before, so much can happen. So if the client decides to pull out for whatever reason, I then need to find a new property. I might need another mortgage. They might be putting on less deposit. So we've got to do that again. Yeah. If the seller pulls out, which happens, I think 80% of sales, no, not 80%. What is it? Not 8%. It might be like 25% of sales fall through. Yeah. If something happens on their end, we then need to have a conversation. So then throughout that time, if everything's squeaky clean, it normally takes about 12 weeks from, I'd probably say from mortgage application, it'll probably take about 10 to 12 weeks before you actually get the keys. Yeah, that is a long process. You'll be back and forth. Solicitors will ask you for everything under the sun. You're going to hate them. You're not going to get through to them on a Friday because they just don't pick up the phone. They just don't pick up the phone. They don't pick up the phone on a Friday. Like, it's weird. And then they'll send you a pack that's about this big, and it's normally your exchange pack. Yeah, Dan, you'll know. You got to go through everything in there with a fine tooth comb, and I would advise everyone. When they say T's and C's, go through everything because you don't want to get stuck.
It's not a quick accept and continue.
No. It's not like you're going accepting cookies. It's a real serious.
Put date night on hold, innit? Like,
yeah, that could be the date night.
This is date night. Yeah.
Date night, yeah. So you go through everything. Make sure you're happy. So you're in a position to exchange contracts. So exchange of contracts means you're legally liable to buy that property now. Yeah. Have to buy that property.
We're getting closer.
There's no going back once you exchange. And then on exchange, you pay 10% of your deposit.
Right.
That makes sense. So if you put down 100K, you put down 10K on exchange. Yeah. And then you put down the 90K on completion. So completion's normally 5 days or a week after exchange, right? And that's when the solicitor gets your mortgage money. They then send your mortgage money to the seller's solicitor, and then they give it to the seller, and then you get your keys. And you get your keys.
That's when you can pop the champagne. Yeah.
That's when That's when you get the picture. You know, when everyone's like homeowner.
Homeowner.
The boomerang.
Homeowner. Yeah. So, but I've just said it. In reality, there's so much involved in what.
Of course.
Yeah.
Jay, what's the quickest start to completion that you've ever had?
Quickest offer I've had is 3 days.
Oh, right.
And you don't know him as well, but I'll tell you.
Yeah.
Free. Like, I've actually done so many mortgages. Like,
and the longest?
That we know. Longest. What, mortgage offer or the whole process?
Whole process.
The whole process.
Whole process was about 10 months. I had to get him a new mortgage offer because it expired.
Okay, yeah.
It's mad. It's crazy.
Yeah. And you know what? And you know what's so bad about that? So, for example, someone like Mike here, where he's on commission, if normally they go off the last 3 months pay slip. So let's just say Mike has a wicked commission, for 3 months, we can get him that property. If your mortgage runs out, and we need to do new mortgage offer, and Mike sat back,
the world changes.
It's mad. It's mad.
Can't get that property no more. You know what I mean? So I would say quickest completion, Dan, is probably about 5 to 6 weeks from start to finish. That's on a purchase, So a remortgage is a lot quicker. On a purchase, 5 to 6 weeks.
That's quick.
Yeah, longest is about 10 months.
Yeah, it's mad.
Nice. Two of my last questions, Jay.
Les, man, it's not like you're paying me or anything, but it's cool.
This is for the people.
We're gonna catch a invoice after.
We're doing God's work over here. 2 questions from me, and I think they're quite big questions in property and quite a few things in life. Sort of rates. So what's the difference between a fixed and a variable rate? And also the question after that would be, why do rates go up and down?
Okay, so rates go up and down. It's just a market. Yeah. So rates work in tangent with savings. Yeah. So what people don't know is, you see, when you're putting your money into your savings account, they actually use that money to lend to people on mortgages.
Yeah.
So, you know, everyone says, oh, you get like 0.25% if you go to the bank. Yeah. That's because mortgage rates are low as well. They have to work together. Yeah. So many different factors. So, for example, the economy. Yeah. So, for example, like the pandemic at the moment, that is why rates are so high, because the risk factor to lenders now is crazy. So they have to put a higher interest rate, because if it's the same as before, they're not going to be making as much money. They need to hedge it, basically. You need to hedge that. So that's why you've got a higher interest rate. So pre-COVID, Les, I'll give you an idea, yeah? And this is what I want to do for you guys, yeah? So pre-COVID, let's use that 400K example, yeah? If you was you would have been paying pre-COVID, you would have probably been paying on a, let's use 400K, yeah? 400K mortgage amount, yeah? Over 25 years, we'll say, yeah? Just easy, yeah? Pre-COVID, you probably would have got a rate of 1.4% maybe, yeah?
Right.
So your mortgage payments would have been about 1,581, give or take, yeah? Now, yeah, you're probably going to be charged a rate of maybe 2.1, give or take, yeah?
Right.
Give or take, yeah? So your payments at 2.1%, is where they're at, you're looking at about 1,715. So you're looking at about a good 190 pound more than you was paying before. Yeah. And that's with a big deposit. So let's just say the most people, guys, they don't have big deposits. They normally put down like, say, 10%. Yeah. So let's just say we've got someone who's putting down 10%, yeah, which is 40K. Yeah. So let's just say they're borrowing 360. Yeah. So basically, with interest rates, Les, yeah, they change on the amount of deposit you put down. So if you put down 10% or if you put down 15%, you're going to attract different interest rates. So the bigger deposit, the lower your interest rate's going to be. You feel me? Yeah. So if you came to me and your deposit worked out 14%, yeah, and you was getting charged 3%, yeah, I would say put down another 3K and get 1.2%. Do you see what I mean? Because you may as well put that down to save yourself money in the long run, if that makes sense. Yeah. So, for example, I'll give you an idea of how mental rates are now. You got it's crazy. Yeah. So, if I had a first-time buyer coming to me now, yeah, in this COVID world, yeah, if they said to me, listen, Jamie, I want a 400K property, I've only got 10%, yeah, 25 years on a repayment mortgage, their monthly payments would be, it's mad by the way, £1,781 a month. Yeah.
Safe.
The cheapest 5-year fixed rate at the moment with 10% is 3.39%. Yeah. That's the cheapest rate. That, you lot, is ridiculous. So pre-COVID, they would have got maybe a 10% deposit. What would they got pre-COVID? Maybe about 1.89, yeah, for example, maybe. I don't know. Could be a bit wrong. Don't quote me, guys, yeah? They would have been paying 1,400. So you're actually now paying about £400 more per month because of COVID.
It's nuts. It's actually
lit. It's mental.
It's crazy.
So when you put down a bigger deposit, it's not as bad. But them lower deposit, because the lender's risk is that much heightened, because you only put down 10%. So now if you default, and if that property ain't made any money, I might not make no money. So that's why they've hedged it with a big interest rate, so that covers them. Does that make sense?
Right. Yes.
That makes sense.
Yeah.
Perfect sense.
Yeah. So that's your answer on that one, Les. And so fixed and variable, yeah? Yeah. So fixed rates is basically what it says on the tin, yeah? You will fix a rate typically between 2 and 5 years. You can do it to 10 years, yeah? But it's typically between 2 and 5.
So the rates you just explained, these are the rates, yeah?
Yeah, so the rates I just explained, that was just based on a 5 year, yeah? Typically, if you fix the shorter you fix it for, the lower the interest rate will be. Yeah. Okay. Typically. Yeah.
Did you have you had a post on this on your Insta, no? I think something similar.
Yes. Yeah. I was just explaining. Yeah. So go over to Jamie the Broker, you can see it. But all fixed means is that you're fixing your rate for 2 years. So you're paying exactly the same amount for the next 2 years. That's all it means.
That rate is safe.
Yeah. So if we go into a triple recession pandemic,
Depression.
You're good.
Combustion. You've got that security because nothing. No matter what happens, next 2 years,
will remain unaffected for 2 years.
Yeah. So the benefit of this, you've got stability. You can budget. You know what you're paying, right? But with a variable rate, and they call it the standard variable rate, it depends because every lender's standard variable rate is different. You could be paying 4%, and then in a year's time you can pay 6%, or you can pay 4%. In a year's time you can pay 2%. So you don't have the flexibility. That's the one thing. You don't have the stability. Sorry, you don't have the stability, and it doesn't allow you to budget because your payments can change from month to month.
But the silver lining that you might benefit and save from
you just don't know, innit? Yeah.
So like our parents' generation, if you speak to them, they don't know about, fixed rates to them is like, whoa, you got a fixed rate. Like they grew up on variable rates. They grew up on variable rates. And you lot have probably heard like early 90s when the rates, I think it was early 90s when the rates were like 12.9%, all of that stuff. But if you had a fixed deal back then, it wouldn't matter because you're fixed.
It stays the same.
It stays the same.
Is there a reason why you would get one or the other, or why one or the other would be, I guess, available?
Yeah. So if you're, just for example, you're an entrepreneur, philanthropist with all this money in the world, like you can get a variable rate because you can afford to. Do you see what I'm saying? But if you're a first-time buyer, you're cautious. You've never done this before. Your salary's at a ceiling where you are at the moment. Why are you gonna?
Safety, innit? It's a safe option.
It's safety. Do you know what I mean? Why risk it? But even at the moment, lenders have cut their base rates. So there's like variable rate, there's a base rate, and there's fixed rate. So now you can't even get base rate trackers. They're not even available. Like some you can do, but some products you can't even get them. So it's just fixed rate to the market at the moment.
Yeah,
they want the stability themselves as well, isn't it?
Of course.
Yeah, because to the lender, at least to them, the lenders, all right, cool. Now I know you're paying me that, innit? For 2 or 5 years. But yeah, man, the mortgage world, man, it's crazy.
Yeah,
what a time.
What
a time. I think, like, for you, like, as an experience and in time, once we get out of this, like, you can look back and say, like, I managed to navigate my way through one of the maddest periods and came out of it.
Yeah, like that's what I'm saying. Like, it's crazy, Dan, because I've this as much, like, so much, like, I'm fortunate, like, and I always like think about this to myself, like, all the time. I say to myself, like, there's so many people who aren't fortunate, have lost their jobs, etc. I'm lucky that I've literally benefited. Like, I'm literally making more money than I ever made before. Like, I've got the flexibility, and I'm just in a better position, and I'm helping more people that I helped before get mortgages as well, and life insurance. So I've benefited from this pandemic. As terrible as it sounds, I've managed to help a lot of people, like, get their first homes, man, and save the money and stuff. So that's I guess that's the only positive I can kind of take from this pandemic. However, we'll see. Let's have this conversation after March when the stamp duty stops.
Yeah. See what it's like then.
Yeah, we'll check in.
Part 2 coming soon.
Yeah, man. Honestly, I could drop bare gems, but we'll be here forever, man.
No, so cold.
We went through quite a bit, man. I think
big thanks for that, Jay. I feel like you gave us everything, really. I feel like you covered all the bases.
I feel like we should do a whip round and give him some money or something.
No.
Les is getting a mad invoice.
Coming out of Les's deposit.
But no, as I said before, and I think we've done it in the last few episodes. It's good to talk to people who are, I guess, doing good things, entrepreneurs, people who kind of step out on their own. And we asked, shout out to Gifted London, who were on the episode last week. Just to someone who, again, stepped out on their own, Jay, what would you say to someone that's, I guess, thinking about doing whatever it might be? What advice would you give to them about someone thinking about taking that plunge?
I literally was speaking to one of my ex-colleagues literally 2 days ago, and she said, "Listen, Jay, man, think about self-employed. What's your advice?" And like I said, it depends who's on the other end of the phone. There, like, it depends who the person is, innit, and who the advice is. But one thing I will say is try and have a safety net, man. Like, protect yourself. You know what I mean? Yeah. Just in case, you don't make nothing for 6 months. And my other thing is, bro, what's the point in playing it safe? You might as well risk it to say, didn't work. If you play it safe, you're never gonna know.
Yeah.
Like I would never know. If I stayed there, I would never know. Or if I've done this and it didn't work, at least I know, you know what? Oh, it didn't work, innit? I tried. That's how I look at it. There's no, like, it was the unknown to me, innit? So, yeah, man, I'll just say take the risk, but just take a calculated risk, innit? Have that safety net there. If you're someone who, you know, is single, living at home, don't have crazy debts, then there's no reason to not just go for it, man. Just go for it. If you don't have crazy outgoing, go for it. If I didn't have crazy outgoings, I was living at home, I would have done this way earlier. Way earlier. But when you got a kid mortgage, yeah, man, just get that safety net. Get that safety net, man.
That's the common theme, man. People are just like, yeah, once you got your safety net, take the risk, man.
Take the risk.
Jump off the cliff.
And you know what, though, Dan,
it's
not, yeah, but it's not like, you see this whole like self-employed entrepreneur thing is not for everyone. Like, and
it's not as sexy as everyone makes out.
No, it's not like, bro, like working till 1, 2 a.m. Like, it's not nice, isn't it? But one thing I will say is don't get what's the word? Don't get gassed into thinking that this is the only way. You can make good money working for someone in this job as well. You don't have to, you know, go on your own. Obviously, you'd make more, but you can make a very good income being employed and working for someone, and you can still help loads of people. And that's what it's about. Like, I started Jamie the Broker because I wanted to educate and help people. Like, because I know the misconceptions. I know there's probably someone out there who thinks they can't get a mortgage, but you can. So I started that really, bro. It was just to educate and help people. And I think I've done that, man. Like, I've helped people with mortgages already just off Instagram. Do you know what I mean?
That's what matters, man. I think that's one of the reasons, like, from the start, when you was like, well, you said it today on this podcast, but with the content you've put out there, you're like, oh yeah, I'm not wearing a suit, because I think it's a big thing for people to see people like us, like a new generation. It's not always some older guy from a different community or whatever doing this stuff. I think you're doing good work, and it's very important, man.
Yeah, I think it's, bro, you just got to give them the real. Like, I'm not wearing a suit. I'm not going to wear a suit. I'm most comfortable in a tracksuit. If, you know, you have your stereotypes, then we might not be able to have a conversation. But if you do, man, like...
I mean, I would look at you twice if you turned up and I said, this is my mortgage broker, but you said some good things today, so I'm going to let that one slide.
We can vouch.
It's about the content, innit?
Of course.
That's what it's about, man. That's it. Like, bro, if I'm saving you money, bro, you don't care what I'm wearing, man.
Of course not.
And anyone, bro, that's got anyone, guys, from your followers, anyone that's got a question, like, honestly, like, no, it sounds so cliche, but in this thing, no question's a dumb question. Like, just fire away, like. Fire away if you got any questions, man. But yeah, man, it's been a pleasure, guys. I'll be listening to this on Monday.
Bro. Yeah, man.
Thank you very much.
Yeah, man.
Broker. Appreciate it.
So good. Love, man. Thanks a lot.
Nice one. Bring-ins.
Bring-ins, man. What?
Let's get into it.
I know, Jamie, I know you're a man that's partial to a series and a bit of music and that. You don't have to go immediately, but...
Give me a bit of music, bro. I'm cold.
A bit. Music. You're more of a filmsman. You're
not a music man.
Bro. No, I bang me. I just don't listen to the stuff that... I just don't listen to put me to sleep music. That's it. But I've got to bring in. I've got one. It is a film. It's a film, Shock.
There we go.
So it's a series. Sorry. It's Night Stalker on Netflix. It's basically about. It's LA 1985. Mike, you'll like this one.
Come on.
LA 1985. It's basically about a serial killer, basically, who literally just starts going absolutely crazy.
Is it a documentary or a drama? A documentary, okay.
It's a real life true crime documentary. It's about a serial killer.
It's true.
Yeah.
Where in LA is it? Like what? Hood in LA? And that?
It's, bro. He's like, his crime span literally goes everywhere. He even goes to San Francisco. So I can't even narrow it down. Do you know what I mean?
California,
but the guy, like California basically. But the guy is literally killing someone on this road, then going to another road and raping someone. Like, it's mental. It's mental.
Jesus. Yeah,
but it's proper true. It's gripping. If you like that stuff, yeah, man. Night Stalker on Netflix, and it's a limited series, so you need to get it quick.
Cold.
I'll definitely check that out. That's kind of my bag.
Yeah.
Have I got I'll give you a series. This is a bit of a different series, man. It is
a music
also
one. Can I give man a music one? Quick.
Well, go on then.
Yeah. So there's some guy called, his name's E-Mac. So E.Mac, M-A-K. He's got EP out called Crack the Code. Been listening to him. Solid mixtape. It's only about 9 songs. But yeah, man, give him a listen, man. He's decent. He's decent rapper.
Mm-hmm.
Yeah, cold. Is that US or UK, by the way, Jay? Just
UK.
Okay. What was I saying? Oh yeah, series also on Netflix. Brother Franklin was the one that suggested this to me. It's a bit of a different one. It's a series. I'm not sure what kind of category I'd put it in. I guess it's kind of. I guess it's fiction. A series on Netflix called Alice in Borderland. It's a subtitle thing. It's based in Japan, but it's just something very different. I don't feel like I've seen anything like it before. So it's I was gonna say it's kind of lighthearted, but it's actually not. But it's a short thing, only 8 episodes. I haven't even completed it yet, but it's a decent watch.
What's it about?
It's about some guy. He's like a bit of a bum in it. Like he just bangs games all the time. He's not like his life's not going in any direction. Him and a couple of friends, and then they one day they don't even wake up. Something happens, and then bare people, like the majority of Tokyo, are just missing. It's like him, his brethren, and then a few other people they run into, and they get entered into like it's almost like a Hunger Games type of battle royale kind of thing.
Yeah.
They're like games, and they have to survive and make decisions, and it gets a bit mad. Like it's actually semi like emotional. Like some of the choices man have to make. It's almost like Saw or one of them escape room kind of things.
Yeah.
Okay.
Episodic and that. It's different. It's different thing still, but I kind of like it.
Jeez.
So check it out. That's Alice in Borderland or Borderlands, I think.
Alice in Borderland.
I've got a music one this week. It is from an artist who seems like new school rapper, divides opinion, but it's a rapper, Russ, the American one. Very, very smart guy. And it's a song off of his mixtape called Chomp, and it's called Momentum, and it's featuring Benny the Butcher and Black Thought.
Black Thought.
Ooh, two high level MCs still.
Yeah.
Two very high level MCs.
Yeah.
Cool.
Okay. I got another music one as well. It was along with a theme we was talking about in the group this week, actually, on like samples and all of that. And the tune's got like a bait sample. The song is Fat Joe and it's Sunshine. As soon as you listen to it, you clock what the sample is. So yeah, I just thought I'd bring that in.
Is the title a giveaway?
Yeah, I was thinking that.
to the sample?
Potentially. I'll let you lot, see if you could get it.
Okay. Yeah, man, that's episode 191. Jay, big thanks for coming on again, man.
Nice one, bro.
You dropped a whole bunch of gems on the people. And yeah, man, appreciate it.
Hatton Garden today.
you lot listeners are gonna go up tenfold. Come on.
And now what is it? People get 10% off if they quote Mandem.
Yeah.
Give us a cut, bruv.
No codes.
Thanks for coming on, Jay. And as you know, you're welcome anytime, not just to steal your knowledge. But yeah, man, that's episode 195. As always,
or 191.
191. You jumped.
That's what I said, right?
No,
195.
Someone wants a night out, do you know what I'm saying?
191. As always, share, subscribe, like, all of that, follow. It's the Mandem podcast.
Keep it locked, man.